Marteen, that number of 1.7 million as an average tax from wealthy individuals sounds a bit low to me. But let's set the scene here. These 2,300 individuals, these presumably, some of them are extremely wealthy, and they avoid tax as much as they can. What is the landscape that we're talking about here?
Okay, I think that's perception maybe that they're avoiding or evading tax. That's not really the case. What is happening, SARS is looking at wealthy individuals and they are concentrating on them because they are of the opinion that they can get more tax paid by the wealthy individuals because they do need more tax paid in South Africa, and it's true that a little portion of individuals is contributing to the most tax. And that's going to continue like that. I mean, they're even speaking of a super tax for the wealthy individuals. So we know they are looking, and they have specifically said in the budget speech in February they are going to look at trusts. They're going to do tax compliance audits on trusts, local and offshore trusts, because they think there is tax being hidden there. The reality is, what they don't realize is that individuals, wealthy individuals, use trust as structures to plan. And it's legal planning. You use structures for protection of assets, for your next generations, for your wife and children. You use it to get away from the inconvenience, for instance, at death. Because you've got continuity in trust, it doesn't get into your estate. You don't have estate, you plan on estate, you plan for estate duty as well, and you do save. That's a consequence of planning.
Now, some of these trusts, as you say, are perfectly legal. Some of them would be relatively small. Your income might be modest, but you want that as a vehicle. There must be some people, though, who have very elaborate trusts, foundations, and so on. But the point is SARS saying that this is, the term it's used in the past is impermissible tax avoidance, ITA, is the term that SARS uses, saying, yes, maybe there is a legal loophole for you to get this money and keep it from us, but actually it's impermissible.
SARS is looking at instances where it's impermissible. And that's why they're getting very extremely strict. When they walk into a client and they do a tax audit, they will look at the trust deed, they will look at the resolutions, the way transactions are done in the trust that is done properly. They're looking at all kind of ways to look through a trust and to tax, things in the individual's hands instead of in the trust, like for estate duty.
So should people be worried, high net worth individuals?
They should be worried if they don't run their trust properly. And in terms of the guidelines given, then they should be very worried.
Is it possible that there are trusts which have existed for a long time, which have just been bumping along, mostly secretly or quietly, that perhaps aren't compliant, although the owners, the people who run them, perhaps think they are?
Yes, definitely. There are lots of trusts that are not compliant, but they're unaware. They don't know, and they should go and see tax experts about it. Because in South Africa now, you need to have an independent trustee for starters. You can't just have your family members on. You need to have an independent, you should do it properly. The same with offshore trusts. You need to have a trust company overseas, offshore trust company running your trust and running it properly, arm's length.
Just come back to that number of 1.7, which they give as an average. Surely that's too low, if you're only talking about 2,500 people.
The number is very low.
But a lot of people would earn that kind of money and earn that kind of tax. More than 2,500 in South Africa, surely.
The number is very low, but apparently that is the case. It's a low percentage of South African wealthy tax individuals that contribute to the tax burden.
What's your sense of the degree of compliance from your clients, from the work that you do? How close is SARS to getting compliance here?
I think in South Africa we're still way behind. Overseas they are much more compliant. The trust law, they've had lots more case law there for a long time, and they've got lots more legislation which helps the client because you know exactly what you have to do. In South Africa we've had a couple of court cases lately which has helped us. The Parker, the Badenhorst, the Brits versus First Rand case, those ones. That's helped us a lot. But clients, they don't know, they're unaware of what they should do, and that's the biggest problem.
What's the biggest area of non-compliance? I mean, SARS lists in their little document here where they talk about the compliance for the next 5 years. Fringe benefits not being declared, VAT claimed without declaring VAT, artificial losses and deductions, salary restructuring. What's your sense of where the problem is?
I think if you look at structures, the problem is most probably the way the trusts are funded, that they're not doing it the correct way, and the other thing is the person setting up the trust and putting the funds in retain too much control. They retain too much control, they control it, and what SARS then says is that the alter ego principle, they look through the trust and say there's an alter ego of yourself, so we regard it as your own assets. And overseas we've got the sham principle. They look at it as a sham and say the trust is a sham. We look through it and we regard it as your own assets for tax purposes.
Well, we'll have to stop there so that you don't have to wake up screaming in the middle of the night with men with horns on their heads, Pravin Gordhan and Opa Magashula. Get your tax ideas in order there with trusts and things and check that they are indeed compliant. That was Marteen Michau, who is Head of Fiduciary and Tax at Sanlam Private Investments.